Hello and welcome to traders and investors. I'm glad to present to you the daily market review prepared by analysts and experts from fx.cu portal. Here we go. Today is the 4th of May and we're starting from euro-dollar pair with Jakub Novak. Although the labor market report from ADP was better than expected, service PMI from ISM indicated growth on business activity, and there was another increase in interest rates in the US by 0.25%. Dollar continued to decline as a recession is likely to occur at the beginning of the next year. Today, the ECB is due to announce its latest decision on interest rates, which will determine the further direction of the pair. Following it are service PMI data from Germany and the Eurozone, as well as the report on the Producer Price Index in the Eurozone. Growth in these indicators will convince the ECB to maintain an aggressive policy, which is good for euro but bad for dollar. A report on US jobless claims will also be released in the afternoon, following by data on the foreign trade balance, but considering that the market ignored strong data yesterday, it's unlikely that these reports will affect the direction of euro-dollar. For long positions, buy euro when the level of 1.1093 is reached, and then take profit at the price of 1.1159. Growth will be seen if the ECB announces another rate hike. However, before buying, traders should make sure that the MACD line is above zero or is starting to rise from it. Euro can also be bought after two consecutive price tests of 1.1053. But the MACD line should be in the oversold area this time, as only by that will the market reverse to 1.1093 and 1.1159. For short positions, sell euro when the level of 1.1053 is reached, and then take profit at the price of 1.1000. Pressure will return if the ECB signals that it has no further intentions to raise rates. However, make sure that before selling, the MACD line is below zero or is starting to move down from it. Euro can also be sold after two consecutive price tests of 1.1093. But the MACD line should be in the overbought zone this time, as only by that will the market reverse to 1.1053 and 1.1000. We've got a red-hot trading idea for USD JPY pair. Petar Yakimovic presents. USD JPY has been trading downside as we expected, and the first upside objective has been reached at 135.11. Anyway, we see potential for the lower prices towards 133.33. Due to the strong downside momentum and no signs for the reversal, Petar sees potential for the further downside movement towards lower references. Next major downside objective is set at the price of 133.35. The MACD is showing negative reading, which is a sign that sellers are still in control. Intraday resistance is set at the price of 135.00. We've got a midterm trading plan for crude oil commodity asset. Arif Makmur describes. With the appearance of deviations between price movements and the MACD indicator on crude oil commodity asset, the daily chart of the CL tested the break low level support 64.12. Then, in the next few days, CL has the potential to rally upwards to test the 70.31 level. If this level is successfully broken, and even has the potential to continue the rally up to the level of 74.14. But all scenarios for the rally will become invalid if on the way to the target level suddenly CL reverses, corrects down below the level to 63.69. Gold, sweet gold. We've got a trading plan for this commodity asset presented by Dimitris Tapas. Yesterday, in the minutes before the American session closed, gold made a strong upward movement and spiked to the level of 2077, an all-time high so far. Today, in the European session, gold is trading around 2045, below +8 Muri level 2062, and below the 2050 daily resistance 1 level. We can see a strong technical correction so that the price could reach the 21 SMA around 2027 in the next few hours. Yesterday, the US interest rate decision was announced. Though investors had already priced in this increase, hence we saw a strong momentum in gold above the monthly support of 1977 to 2077. In just 3 days, gold appreciated its value by $100. A strong volatile movement and a technical correction are likely to follow in the next few days. On the 1-hour chart, we can see that gold left a gap around 2039. And it's likely that in the next few hours it could cover this gap and reach a pivot point around 2027. Gold is expected to continue falling in the next few hours until it reaches the 21 SMA, located at 2027. Around this level, we expect a technical rebound to resume buying operations, with targets at 2050, resistance 1 daily, and 2062, plus 18 Muri level. On the other hand, in case gold falls below 2027 to 21 SMA, the technical correction is likely to accelerate and the instrument could reach the psychological level of $2,000. That coincides with 88 Muri level and the 200 EMA. The Eagle indicator has reached overbought levels, so any technical bounce below 2062 could be exploited as an opportunity to sell. Our trading plan for the next few hours is to sell below 2050, with a target at 2027, and wait for a technical bounce around 21 SMA. To buy with a target at 20.62. And finally, here's Larry Bailey with AUD USD pair forecast. The Australian dollar settled at the technical level of 0.6670. The Marlin oscillator has also taken a neutral position. If yesterday the Aussie did not react strongly to the Federal Reserve's rate hike, then it's likely to maintain a neutral position today regarding the European Central Bank's rate hike. The AUD-USD pair is waiting for tomorrow's US employment report. The pair's growth seems limited to the 0.6730, as it will soon receive reinforcement from the approaching MACD line. The pair will not weaken further until it breaks through the 0.6628 support level. We're waiting to see what will happen. On the 4-hour chart this morning, the price reversed upward from the MACD line. The leading Marlin oscillator did not move into the downtrend area. There is a potential for growth, but it will either end tomorrow or the US dollar will suffer a defeat in the employment data and AUD-USD will be able to break through 0.6730. That's all for today. See you online soon. Good luck.